All right, getting set up to go live here. Looks like my name's Daniel. I'm with VantagePoint. We're going to be doing our live market analysis today, the view from my VantagePoint. Let's just get my screen set up and going. Good. For people that are just joining the room, this is Daniel with VantagePoint. We're going to be doing some stock analysis, some market analysis in the VantagePoint software. Give everybody a chance to get logged in here. Morning, everybody. Today is January 19th. It's about 11:32 a.m. Fantastic. All right, we should be able to see my screen here. Good morning, good morning. Got a couple people joining in now, so welcome to the January 19th VantagePoint Live. We're just going to get started in just a minute, just getting things set up. Morning, everybody. So we've got a lot of people joining the session now. We're going to be digging into our VantagePoint software, looking at the Dow. I've got the Dow up on the screen. We're going to, just do some analysis and see what the VantagePoint artificial intelligence has been indicating and is indicating for the Dow, giving everybody a chance to get logged into the session. So we'll get started here just in a couple of minutes. All right, thank you for joining. Thank you for joining. As I said, I've got 11:36 a.m. Eastern time. We're just giving everybody a chance to get logged in. We're going to go over the Dow. I've got the Dow up on the screen. Want to dig into some of the details that we're seeing in the markets related to the current action, if you will. You can see we've got a couple of months of the Dow pulled up back to October 19th. And one of the keys to understanding what's going on in the current markets is just understanding what's driving the markets. And what I like to do is just get some good analysis on what's influencing the Dow. In the software that I'm using here in VantagePoint, we can look into some of the things behind the scenes that have an impact on the Dow here on the screen. This is a great assessment of what the artificial intelligence is looking at. And I think this is important to understand as we dig into the details of what the Dow is expected to do. The chart that you see up on the screen right now has several other indices. For instance, you can see that the S&P 500 value index, the spider, there's several other indices like the Qs as an ETF here. The Dow Industrials. These are all being analyzed in the VantagePoint software as a way to determine where and what the Dow is expected to do with incredible accuracy. We're talking about accuracy in forecasting the trends 1 to 3 days in advance with accuracy up to 87.4%. And it's because of these, what we call the intermarkets here. So what we're doing is just taking a look to understand what is going into the analysis behind the scenes. And this kind of analysis can be done on a lot of the markets here in the US, as well as internationally, ETFs, cryptocurrencies, and understanding that this analysis is going into anything that's drawn on the screen here in the VantagePoint software. We're going to walk through the details. But realizing that the Swiss franc has an influence. Of course, gold and the S&P have an influence on the price action in the markets. We know we're in a global economy. That's not a question. We know that the markets are being influenced by markets all around the world. And it's important to take that into consideration when doing any market analysis, in my opinion. So I wanted to just give you a quick view on what's going into the analysis of the Dow. As we talk about the Dow, as we dig into the Dow, it's important to know, what's driving it. Now, I don't have to use that information to make the trading decisions or use that information to analyze what's going on in the markets, but that information is key to knowing that this market, for instance, the E-mini Dow, is expected to move higher, move lower, move sideways. So I'm just trying to get my camera loaded up here, get my camera going to make sure that you can see it okay and everything's working okay. It doesn't look like it's broadcasting on my side of things, but that's okay. We can keep on going through the forecasts. So you can see I've got the Dow up. I've got several months of the Dow up. Right now we're just looking at candlesticks. We're just looking at the candlestick action of the last couple of months. You can see what's happened in the last couple of days related to the Dow. And the first thing that I want to dig into is whether or not this is something that was detectable utilizing these information, utilizing predictive indicators. It's always good to manage risk as usual. We know trading is hard. Nothing is perfect, but if you can utilize indicators and information that are doing global analysis and have the ability to forecast trend movements, that could stack the odds in your favor. We're talking about probabilities. We're talking about playing the probabilities. And by looking at this, you can see that there has been a pullback. I think everybody's probably seeing it and feeling it even today. Even with the fact that, some of the reports that came out today related to building, related to jobless claims and housing starts, not as bad as some people expected, not as bad as some of the forecasts. And a lot of people have questions related to that around if those reports and the jobless claims weren't as bad as expected, or better than expected, I should say, then why is the market doing what it's doing? And I can tell you that a lot of the market movements, the majority of the time, in my opinion, the markets are moving because of those intermarkets that we looked at briefly that are influencing what the Dow is expected to do and where the Dow is going. So Apparently I can't get my camera going here. I'm just going to give it one more shot to see if I can get everything broadcasted as needed, so I can make sure you guys can see. This is a live session, as you know, and sometimes there's, with live sessions, there's technical difficulties, and looks like right now, just from a camera standpoint, I'm gonna try to remove the camera, add it back in, and see if we can get this this going here. Of course, you probably don't necessarily need to see me on camera, right? As long as we can dig into the forecasts and understand exactly what it is that we're expecting, or what the Dow is expecting to do. There we go. I think I can get it. I can get it moved around here a little bit for you. All right. If you've just joined, welcome. My name is Daniel with VantagePoint AI, and we're going to be digging into the Dow. So if you look at the screen right now, we can see that we've got the Dow on screen. The last couple of months of the Dow, we've had some sideways action going into the new year. There's been a really great trend that was identified early. A lot of traders were able to grab that trend, that information, and really utilize it to their advantage. But what about now? Is there a way to know that this pullback was expected? Well, let me just pop on one of the predictive indicators that we have here, and that's the short-term predictive indicator. You guys should see that up on the screen now. It's a blue line, and the great thing about this blue line, it's being compared to a simple moving average. The blue line is a predicted moving average, and it has predictive information in the formula. And one of the key things to notice, anytime that this blue line crosses the gray line, and the shaded area goes from green to red in the VantagePoint software, that's an indication of a pullback, potential trend change. Now, what we're looking at here is a one-day forecast. In this one-day forecast, we're able to identify, not yesterday, I mean, this is yesterday's candle, right? But the day before, at the end of the day, 6:30 p.m. Eastern time, the artificial intelligence pulled in the global data, pulled in that intermarket data, did some analysis, and then was able to determine that there was an expected reversal, a pullback, a short-term pullback in this. Today's being Thursday, January 19th. This pullback would have been identified on Tuesday at 6:30 p.m. Eastern time, right here on this day. This indicator is telling us that there was some bearishness expected. We certainly got that bearishness yesterday. You can see that from this candle here. And then at the same time, that blue line is still below the gray line. That shaded area is red, and you can see that back behind that candle. As a matter of fact, I can zoom in a little bit on this for you so you can see what I'm talking about here. You can see that shaded area behind that candle indicating still more weakness today. That weakness for the users of this technology is saying that there's a weaker market expected today, January 19th, and that would have been available at 6:30 p.m. Eastern time. Now, one of the things to understand about this is that not only can you understand the next day's impact with a high degree of accuracy, but you can get 2 or 3 days out. So right now on the screen, you see this gray bar. This gray bar, for those of you that don't know, is the predicted high and predicted low. That predicted high and predicted low are available in the VantagePoint software for every market or asset that's covered in this technology. And what this predicted bar is telling us is that we can expect a high today here and a low today here. We can see that the high predicted around 33,672 and a low around 33,86, so call it 33,000 for the Dow. Well, that's valuable information to know. If a trader is long this opportunity or expecting the Dow to continue higher, but the predictive information is saying prices are expected to go lower and could go down to that 33,000 level, the movements of the market the next day are not as surprising utilizing this information. So when we look at this, we can see that the artificial intelligence was clearly saying a pullback was expected Tuesday. Wednesday, we got that pullback, lower market expected today, Thursday, and we're seeing that. Now it's 11:46 a.m. Eastern time here. I'm in Tampa, Florida, the VantagePoint AI headquarters. And what we can see related to the predicted movements of the Dow is weakness. Just, weakness is clearly identified at 6:30 p.m. Eastern time. Users would have been able to see that weakness on the screen and expecting this market down around that 33,000 mark. No surprise about where the market is, even with some of those positive housing and jobless claims reports. The question I get a lot is how and why, can it be that accurate? How does it know that far in advance? And let me just show you one more time what that is, and then we'll go into the analysis that we're seeing moving in the future. If I just simply go right here into the market details, I can see what the artificial intelligence is indicating related to what is driving the Dow. There are some things on here that make complete sense, like the S&P 500 in gold. But Korea Telecom, Plains All-American Pipeline, Energy Transfer have all been identified by the AI to influence the movements of the Dow. That's where this blue line is being drawn from. And a lot of the predictive indicators, all of the predictive indicators that I'm going to be talking about today to help you understand what's going on with the Dow are created after the intermarket analysis has been done. If you haven't heard of the term intermarket analysis before, that's specifically the process that we utilize to apply artificial intelligence to the global markets to determine what is influencing the asset we're trying to analyze, in this case, the E-mini Dow, the YM. That intermarket analysis is a patented process. It utilizes those global markets then to create predictive price, and that predictive price is updated and added to the predictive indicators. Both patented processes here at VantagePoint that we've been deploying now for decades and decades. We've done nothing but utilize this artificial intelligence in this way since 1991. So those of you that are new to this technology, that are new to this analysis, just understand that this isn't something that is a theory or an idea. There's been traders, tens of thousands of traders have been utilizing this kind of analysis. And here's how. We see the blue line cross below a couple of days ago. We know that a pullback is expected. The pullback was expected to continue today and get down to 33,000. That's clearly identified here on the screen. We can go look at the Dow on the live markets if you want to and see that that's what happened. This information was available at 6:30 p.m. Eastern time last night. But how do we know that reversal or that pullback is a highly likely pullback? And that's by layering on additional indicators. So I'm going to go in here and I'm going to add an indicator called the predicted neural index. And when I add the predicted neural index, it adds this bar down here at the bottom. This bar down here at the bottom is utilizing that global analysis to predict strength of the trend. And the interpretation of it is when the bar is green, that's indicating bullish strength. And when it's red, it's indicating bearish. Well, we can see that bar clearly turned from green to red right here. On this day was clearly identified where we can see there was a reversal expected, not only from a trend standpoint, because that blue line, that trend predictor indicated weakness from a trend standpoint, but also the neural index. The neural index identified that there was some weakness as well. So now we've got a multitude of predictive indicators. We've got our blue line predicting short-term trend weakness. It's called the predicted moving average. We've got our neural index indicating bearish strength. That's a predictive information going out a couple of days. And then we've got our predicted high and low saying prices are and can be expected to be lower than the close yesterday and even lower than that, as I said, down to 33,000 for the YM. All of this information was available at 6:30 p.m. last night. We can then also layer on some momentum indicators. For those of you that utilize momentum indicators, it's a valuable piece of analysis to know whether momentum is building. Momentum can add steam and power to a trend. In the VantagePoint software, what we're doing is we're analyzing 3 predictive momentum indicators down here in the bottom. So the bottom part of this chart, we call it the bottom or the lower region. You can see that there are 3 lines. There is a short-term 1-day predicted momentum line. That's giving us, it's like an aqua blue color. We also have a 2-day, that's a fuchsia pink line, if you will, or a purplish line. And then we have a 3-day predicted momentum indicator called predictive differences. All 3 of these are called predictive differences, and they're oscillators that can help you understand whether or not momentum is building or not. I say building, could be building bullishly, could be building bearishly, could be consolidating. All of that is valuable information to know, and the fact that you can get it out in advance, 1, 2, and 3 days, could bring an extra level of confidence. Excuse me. Could bring more probability, stacking the odds in your favor. So we can see at the same time that we saw the trend forecast indicating bearish trend, and we saw weakness building in from a predicted neural index standpoint, all predictive indicators, and momentum. As a matter of fact, momentum started peeling off a couple of days before. We can see about here, we saw the momentum create this high and then start creating lower highs on that 1-day blue line. We could also see then the 2-day line rolled over and the 3-day line rolled over to the point that, you know, the other day, when I say the other day, I'm talking about Tuesday. This was Tuesday's candle right here. Tuesday night at 6:30 p.m. Eastern time, all of the predictive indicators were saying there's certainly bearishness expected in the Dow. And the movements from yesterday and the movements from today are not a surprise at that point. We can see that looking at these indicators provides us that confidence, but we can then also go a step further and add support and resistance to this analysis. By adding support and resistance, you're able to understand whether or not there are old price points that can have an impact on current or future price. By understanding those old price points, knowing where they are, and utilizing them to know how likely prices can continue in one direction or another valuable piece of analysis. So I'm just going to add the VantagePoint verified support and resistance indicators right here onto the screen. By adding those onto the screen, you can see that I've got some shaded regions. And these shaded regions are verified support and resistance zones. They play off of these arrows and these dotted lines, which identify support and resistance levels. For those of you that analyze support and resistance and utilize those past price points to help you understand where current price could pause, knowing that two levels, when compared to one another, can give you a zone, if you will, a region to keep an eye on, is a next level support and resistance analysis. Because if you're looking at this resistance zone that's been identified here, and we know this is a resistance level, I said zone, I meant level. We know this is a resistance level because we've got a high with 2 lower highs to the right and 2 lower highs to the left. That's the definition of a resistance level. Well, if I have that one and then I have this old resistance level here, I should say this resistance level that happened, beginning of January here, because we have a high with 2 lower highs to the right and 2 lower highs to the left here as well. Well, by comparing these 2 levels to one another and creating this zone that's available in the VantagePoint software, I know now which area price is going to struggle the most to get through. And here's what I mean by that. Based on basic support and resistance levels, when price breaks that resistance level, if we can get 2 closes above that, we can expect a breakout. That's what we got. We got a break. Blue line was above, indicating bullishness. The neural index was green, and we had the momentum creating higher lows. We got a break of that resistance level that was, identified by this red arrow. And then we got our 2 closes above that resistance level, confirming that we have a resistance breakout in front of us. In addition to that, at the point that we had confirmed that resistance breakout, the blue line was above the black line and the shaded area was green, where the artificial intelligence is telling us at that point that we can expect higher prices. Well, at that same time, we can see that the prices certainly went higher. The neural index was green, still creating higher lows. But as we get deeper into this resistance zone, now remember, I'm calling this a zone because we're connecting 2 resistance points. We need more momentum to get deeper into that zone. And for those of you that use support and resistance levels, understanding that the closer you get to the next level, the more bearish pressure there is on price, the more momentum you need. There's 2 things that can push price through a resistance level and deep into a resistance zone, and that's volume and momentum. Those two things are key. There's other things, but of course, volume and momentum are some of the best indicators to know whether or not prices have enough steam behind them, enough force behind them to push through and deep into that zone. And you can see as momentum started peeling off, and this is why it's important to understand momentum, prices struggled to get deeper into that zone. Well, comparing the fact that momentum's pulling off or getting deeper into we're in the top half of this resistance zone, if you will, and prices are starting to retract because momentum's retracted. We can also go look and add volume to this chart. And by adding volume to this chart, we can see that we are getting not bullish increasing volume, but bearish increasing volume. These volume bars identify that we've had 2 bearish volume days, more short selling, if you will, more bearish volume than bullish volume. And yesterday we had more of it than the day before. So not only are we seeing momentum retract or momentum turn from bullish momentum to bearish momentum in a predicted way, we're seeing volume change from bullish volume to increasing bearish volume. Well, if those two things, volume and momentum, can help us understand how likely price is to push through a resistance level or deeper into a zone, we're losing and we're predicted to lose more of that as days go on. So at 6:30 p.m. Eastern time last night, analyzing just the right side of this chart, the users in VantagePoint would have seen bearishness from a trend prediction, bearishness from a predicted high and a predicted low, bearishness, and I'm sorry for the scribbling, just trying to make some clear points here, bearishness from the neural index, bearishness from volume, and this big resistance zone still having a long way to go before it can get to that next resistance level. There's no doubt market is expected to go lower today, and that predicted low down around that 33,000 mark was identified as a point where the market could fall to. Now, if you think about that, having this information at 6:30 last night in this predictive format would have probably given you some confidence around what the market was expected and is expected to do today. By looking at the market today, we can see that I think right now, I'm just checking it out, I can see we're at about 33,001. So we're sitting right there at that predicted low that was identified at 6:30 last night, which is about 265 points off of yesterday's close. So very clearly, very easy identifiable with these predictive indicators, but we can take it a step further by not only using the predictive indicators here in VantagePoint, but enhancing some of the indicators you're used to using with that artificial intelligence. When I say enhancing, what I'm saying is updating and providing predictive information into the formula to transform them from a lagging trend following indicator into a leading indicator. And some of the indicators I hear a lot of people are using are the momentum indicators similar to MACD, RSI, stochastics, percent R. There's several momentum indicators out there that traders are using to try to make some trading decisions. And I've added their predicted versions here in VantagePoint right onto the chart. I've added several of them, and I'm doing this just to demonstrate for you how valuable it is to understand the impact of volume and momentum in its predicted format on your trading decisions. See, at the end of the day, you've got a trade plan. And you're trying to make decisions related to your trade plan. You're trying to decide where the market is expected to go. Well, what I'm doing is I'm using predictive indicators that provide me information with a high degree of accuracy where these predictive indicators are expected to go. I've got immense confidence in these indicators, as you can see here. And they're all saying a similar story. When I've got multiple indicators telling me a similar story, I can make decisions confidently. Here's an example of what I mean. We've gone through some of the VantagePoint indicators, but now here's MACD right here in this region. I can see the MACD line, which is this blue line. It's a predicted MACD. It has 1 day of predictive information in the formula. So at 6:30 last night, I can see that my blue line was pointed down. It had rolled over and now it's creating lower highs and pointing down. I've got momentum from a MACD standpoint starting to retract, or shift. When we talk about momentum shifting, when momentum is bullish and then starts to shift bearishly and turn bearish in the middle of a resistance zone, that tells me I don't have enough momentum based on what MACD is telling me to push through that resistance zone, right? That's one of the things that the successful, confident traders are doing is they're comparing predictive indicators like this to what's going on with price. And I can see MACD momentum. In this case, the predicted MACD version that's available in the VantagePoint software is also saying momentum is waning. Well, if you take a step back from that and you think about the fact that VantagePoint's 3 predictive momentum indicators had bearish momentum, the MACD that you're used to seeing that's been enhanced with the artificial intelligence in VantagePoint is also indicating a shift in momentum, as well as RSI. We know that RSI is doing a calculation of closes over the last 14 days to understand momentum movements. We can understand whether or not price is moving out of overbought zones. And we can see we have a very clear overbought zone with this green dotted line in RSI. This is another indicator you're probably familiar with. However, in the VantagePoint software, it's a predictive indicator. It also has the global market analysis being done before it's drawn, and it has predictive information in the actual formula. So this RSI, predicted RSI, is coming out of this overbought zone at the same time that we're seeing prices peel off, we're seeing the trend prediction, we're seeing the neural index, we're seeing a lot of indicators predicting weakness from a couple of days ago. The predicted RSI is doing the same, coming out of an overbought territory and momentum shifting and actually being bearish in this predicted RSI is an indication, and this was an indication as of 3 days ago, that trends and strength and momentum were shifting from a bullish position, a bullish standpoint, to bearish. Now think back to, well, today's Thursday, so Wednesday. Think back to Tuesday. Think back to Monday, knowing that this shift was expected, knowing that this shift was happening with accuracy up to 87.4% can really give you the confidence you need to make better trading decisions. Got a lot of people joining. I see it. Thank you for being part of today's live session. I'm going to keep on going through this analysis. But what I'm doing is analyzing the VantagePoint software. My name is Daniel, by the way, if you've just joined recently. I'm with VantagePoint AI, and we're walking through the VantagePoint forecast and the indicators so that you can understand what the AI is saying about the current market conditions and what's expected to happen through today and into tomorrow. Taking it a step further, a second ago I added stochastics, and the reason I added stochastic is so that you can see that this is a predicted stochastic indicator. It's a similar calculation to what you're used to from a lagging indicator, except this has been transformed to a leading indicator because there's predictive information in the formula. And what we're seeing here is the same situation. We actually have a crossover on the stochastic coming out of the overbought territory. And by the way, if digging into these indicators in more detail is something you want to see, you can always write that into the comments and we can dig into some of that information. But what we're seeing here is a bearish stochastic reading from a predictive standpoint. Again, another momentum indicator. And then taking it a step further down here in the bottom region, we've got percent R. This is a version of the Williams percent R that's comparing the highest high to the close over a certain period. And what we're looking for is the same analysis. Is there momentum shifting from bullish to bearish? Is it already bearish? Is it consolidating? These are some of the questions that you should be asking yourself when you're using predictive information, because it's giving you insight into the next 1, 2, and 3 days. So when I'm asking, I'm asking my indicator, kind of funny when you hear it like that, but when I'm asking my indicator what's expected to happen from a percent R standpoint, I see it's coming out of this overbought territory. If it's coming out of this overbought territory and this line is pointed down, this is a very clear reading of bearish momentum from a percent R standpoint. What I'm doing here is I'm reading the sentiment of the AI. We call this the AI sentiment. What is the AI viewing is expected to happen for price looking into the future? We've gone through a host of indicators, predictive indicators in the VantagePoint software. And these indicators, if you want more information about these indicators, you can certainly go to VantagePointForecast.com. Again, that's VantagePointForecast.com to learn more about some of these indicators. But what they're doing is giving insight into what can be expected. And it's safe to say through the middle of this week, through the end of this week, the artificial intelligence in VantagePoint on the YM on the Dow here is indicating bearishness, not only from a momentum standpoint, a trend standpoint, a strength standpoint. And don't forget, the predicted low was indicated for today at 6:30 p.m. Eastern time last night, around that 33,000 mark. And the low for the Dow certainly hit that level. Now, we do see that it's coming and it's closed below this resistance level at 33,648, excuse me. That 33,648 resistance level, if we get another close below that after today's close, if today's close is below that, we have to start considering that resistance level is back in play again. And that's the benefit for layering these indicators on the screen so we can walk away with a good assessment on what's expected. But right now, what the artificial intelligence was saying at 6:30 p.m. last night, for those of you that utilize the strategist technology, the software, you had this information at 6:30 last night. For those of you that don't, knowing that at 6:30 last night, we were expecting weakness today and in through the end of the week, I'm sure could have helped you minimize your downside risk, mitigate some losses, exit some positions. A lot of information there that can really help you apply it to your trade plan. Again, I'm not providing trading advice. It's purely from an education standpoint, but if you know that there is weakness expected, momentum has shifted, verified resistance or resistance levels are being challenged, that can help you make better trading decision when it comes to the market. We can do the same kind of analysis on the S&P 500, and you can see the S&P 500 has a similar view. As a matter of fact, I can step through and add these indicators as we go, but we're seeing the same assessment on the S&P. If I go in and I add the verified support and resistance levels that we were talking about here, right in my indicator tray, we can see we've got a large resistance zone. We can see after two closes above that resistance level, price broke out as expected. We can see the shift in the trend, in the strength, in the momentum. We can see a lower high and a lower low. See, this kind of analysis, although I'm going through it quickly, this kind of analysis already, as I say it, you're probably asking yourself, if I knew that there was going to be lower highs and lower lows expected with a high degree of accuracy, that the verified resistance zone was a big zone and we weren't even halfway through it yet, and momentum was shifting and volume was shifting bearishly. If I had known that, and I could know that day in and day out, you're probably asking yourself, what trade decisions could I made differently, better? And that's the intent of these predictive indicators. So this is the S&P 500, and we can do the same analysis on the S&P 500. We can go add our momentum indicators. We can add our MACD, our RSI, our stochastic, our percent R. There's other indicators in here, but you can certainly add these indicators and see. Again, I'm just looking at the right-hand side of the chart. That's all I'm doing is analyzing what's expected to happen today and what's expected to happen in the next couple of days. And I know what's expected to happen in, tomorrow being Friday into tomorrow's market, because the blue line is below. The neural index is red. We've got momentum indicators indicating bearishness, 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 bearish increasing volume, bearish percent R. At 6:30 last night, I had no question about what the artificial intelligence was saying for the S&P 500. Again, I can take these indicators and apply these indicators to whatever market that I want to. I'm going to save them as a default view, right? And this way, when I go to the NASDAQ, I can do the same kind of analysis on the NASDAQ with the same subset of indicators. When I do that analysis on the NASDAQ, look, you may be able to even do this analysis on the NASDAQ yourself now after we've walked through it, but we're seeing the same thing, a fresh crossover last night, weakness here. weakness from a predicted high or weakness from a predicted low standpoint. Interesting thing about the NASDAQ that I want to point out is that as you look at the NASDAQ, you can see that it from a strength standpoint shifted later than the S&P and the Dow. Why is that? Well, my speculation here is that these markets are connected. You know that, and I know that. The Dow and the S&P 500 were pulling down on price, pulling down on trader sentiment, pulling down on the psyche of the market. The NASDAQ wasn't quite there yet. It is there now, and today it's weaker than both the S&P and the Dow. It's lost more value today than the S&P and the Dow are currently losing. And that's because, in my opinion, the S&P and the Dow are driving forces, and the NASDAQ couldn't resist the weakness or the bearishness that was forecasted and is happening in those two indices. And that's an important thing to understand. But if we walk through these predictive indicators, and again, we're getting the weakness that we were seeing before. We're seeing the shift in momentum, consolidating on the MACD, but not quite bearish yet. So sideways, so consolidation meaning momentum is shifting, but hasn't shifted bearish yet. We do already have that bearishness on RSI, on stochastics, on volume, and on percent R. So we see what we saw a couple of days ago forecasted from the Dow and the ES, expected in the NASDAQ. And again, that was 6:30 last night. For those of you that trade the NASDAQ, knowing that information, and a lot of tech traders out there, and rightfully so, tech has been leading, the last couple of days from a trend standpoint, last week or two, from a gain standpoint, and now it's giving back more than the other indices. That's how intermarket analysis works. The markets drive markets. Understanding how those markets are driving each other and understanding what those markets are doing to price in other markets by using intermarket analysis can really, no matter how you slice it, give you a leg up, give you an advantage. And that's why I think that today's live analysis is so valuable. And again, if anybody has more questions or wants to dig into these, maybe you don't have access to these indicators like the VantagePoint users do, just go to VantagePointForecast.com and you can get some of that information that you're looking for here. Stepping out of the indices for a second, let's jump into gold. Just how the markets work one way, they work the other way, and we can see what the artificial intelligence was indicating from a gold standpoint. Just take a look here. Take a look really quickly and see. Really great trends expected in gold. This trend was forecasted up. We can see by looking at these indicators from a long term. Now we're looking at a 3-day forecast version, if you will, on the blue line. No matter how we slice it, we see that there is some strength, although that blue line is starting to flatten out, saying that strength is weakening a bit. We can see that we have a higher high expected, a higher than the close expected today. From a gold market standpoint, we're getting that. One of the interesting things about gold is that we've got a very large resistance zone here as well. The resistance zone, again, is going to be impacted by volume and momentum. Price has to work itself through that zone, and it needs momentum and volume. We are seeing some consolidation in momentum, not bearish yet. Matter of fact, we still have bullish on MACD. We're consolidating on RSI, predicted RSI. We're consolidating on predicted stochastics. We're getting a little decreasing bearish volume here, not an increasing, but there's certainly some bearish volume here. And we're getting consolidation on percent R. So gold hasn't shifted and is not forecasting bearishness yet at this point. It's showing that there is some consolidation happening, some consolidation expected, which means we can see gold, stay in this channel that it's in. We're expecting gold today to have a slight higher price than the close yesterday, but still in this channel. Why it's important to know that it's in a channel is so that you can protect your downside, set stop losses, and do different things so that if this does turn unexpectedly, you get to lock in these profits, this big chunk of profits that were forecasted way back here in November for gold. That's an important thing to understand. Minimizing your downside risk or protecting your losses reducing your losses can have a very a very positive impact on your trades. And for those of you that are newer to trading, that's one of the things that I've heard. I've got over 25 years experience in the financial markets, by the way. And one of the things that is key to understand is that minimizing your downside or managing your risk, having money management is in my opinion first before the profits. Right? If you're protecting or minimizing your downside and using predictive indicators to know when things are starting to shift and when it's time to tighten up some stops, protecting that downside then gives way for those profits to be realized. And when you do realize profits, and again, this is just my opinion, those profits can be bigger because you've got less losses. And predictive indicators like this can give you that view as well. What we're seeing for gold right now based on these predictive indicators is, an increase in price, but consolidation, channeling happening. We're going to need to see some momentum shifting. At 6:30 tonight, I'm going to download this data. I'm going to take a look at it and see what the predicted momentum, what the predicted trend and the neural index are saying about gold so I can determine how likely it is to go higher or lower tomorrow. Regardless, with the consolidation in place, it's clear to see that tightening up of stops, protecting the downside in case there's an unexpected reversal is, a prudent decision at this point. Looking at this, how can I use this information to set stops? Let me show you. For those of you that use mental stops or real stops or physical stops, making sure that you've got a place for a stop loss that is different than the traditional stop loss. A lot of people use, the low of 72 hours ago as a stop loss point. A lot of people will use different things. Of course, your trade plan is necessary. In the VantagePoint software, I've got a predicted high and predicted low. I know with a high degree of accuracy where this is likely to play from a downside standpoint, right? If I have that information, well, then I can simply make sure my stop loss is outside of that. Setting a stop loss outside of that predicted low based on your risk tolerances, that's up to you, right? Everybody's risk is different. But as long as you place it outside of that candle, the likelihood that you get that, when I say candle, I mean the gray predicted candle that you get every night at 6:30. You place it outside of that, the likelihood that you get stopped out inappropriately or unnecessarily, who hates that, right? You're in a position that's going in your favor. You got it pegged the right way, and then you get stopped out, and then the darn thing takes off in your favor, except you're on the sideline. Not a fun situation. Well, knowing the predicted low is there, I can reduce the chance of something like that happening by using that predicted low as a level for stop losses so that I could lock in. If this was a position that I was taking advantage of, I could lock in as much of those gains as possible, yet still managing my risk and protecting my downside. That's a key piece of utilizing the predictive information, especially that predicted high and predicted low. So from a gold standpoint, we are expecting a little bit of, we can see a little bit of shifting going on, a little bit of channeling. We're deep into this resistance zone. We've got momentum waning, but definitely not changed yet. So there's several indicators here saying, you know what, mitigate, tighten up stops, protect your downside. Heck, you could take a part of the position off. That's all up to you. That's your trade plan that's going to determine that. I'm not telling anybody anything to do. The software isn't telling me what to do. The VantagePoint Intermarket analysis software is predicting the market direction, the strength, the momentum, predicting the trends. I then use that information to make my trading decisions according, and you could use it according to your trade plan. And that's where really one of the keys to utilizing this information. Bitcoin is one that I get asked a lot about, and the question I always get asked is, did VantagePoint know Bitcoin was going to do what it's done? Well, take a look. The forecast for Bitcoin turned green on the day before Christmas. What is that? Christmas Eve, December 24th. For those of you that were looking for the right time to take advantage of a trend in a cryptocurrency like Bitcoin, December 24th, we had the blue line, which is a predicted trend indicator saying bullishness. We had the neural index indicating bullishness over, this is again 3 days, this is 2 days, and this is 1, 2, and 3 days. We had bullishness from the 2-day, bullishness from the 3-day, and consolidation from the 1-day. So we knew that we had a high likelihood of Bitcoin going higher on December 24th. Well, let's follow that blue line. That blue line never crossed back below that gray line. The shaded area never turned red. The entire time from December 24th to today, we've had a green shaded area, which using predictive information like this, if we had a crossover, if this blue line crossed below, well then sure, we've got a different prediction and we've got to make some decisions based on that. But you're looking at the real forecast here. And the real forecast from the artificial intelligence from December 24th was indicating bullishness the entire time. That puts you, what I like to say, in the catbird seat. That puts you in a position to profit when things make the move. Well, did things, in this case Bitcoin, did this asset make its move? Yeah, it did. And you can see exactly what happened here. Moving from, let me just put my cursor on this day here. Moving from a close of 16,826 on December 24th to just before the big move here of 16,934. I mean, think about the difference in price here, right? We're talking about $100 and then the big payoff. Bitcoin surges to 21,100 and higher. Surges higher, yet the artificial intelligence said December 24th, expect bullishness on Bitcoin. And the entire time it kept on reading bullishness, bullishness, and boom, rewarded for having that information available in advance. That's the power. This is a great example of having confidence in the artificial intelligence. We know, and let's just be real with each other, artificial intelligence has been a buzzword for a lot of companies. And you've probably heard me say this before if I've worked with you. It's been a buzzword for a lot of companies for, 3, 4, 5 years. The great thing about the artificial intelligence that I've been talking about is we've been utilizing it here at VantagePoint since the late 80s. It became available for individual traders in 1991, right? 1991. You can do the math on that and recognize that's well over 30 years that this artificial intelligence has been doing this kind of analysis, not necessarily on Bitcoin, but on things like stocks, and we'll dig into some of those. But this AI has been available and used this way for decades. And this movement, this price change in Bitcoin that was forecasted back on December 24th is one of the reasons why there's over 10, we're talking about almost 40,000 users around the world applying this kind of strategy. I can take the same indicators, the same predictive momentum indicators, and load them right onto this chart with a couple of clicks that we've already analyzed and see that I'm seeing the same information that I need to see. I'm seeing the movements related to Bitcoin that are happening. I would have seen at 6:30 last night. We're getting deep into the zone. Look, let me zoom in on this again for you. Deep into this zone, right? We're seeing prices top out here. Those prices topping out are because we're deep in this zone and momentum waned, right? Shifted sideways, shifted. This is not bearish momentum yet, but we're getting a lot of shifting, bearish volume and momentum going from bullish overbought momentum to consolidation. That doesn't indicate a trend change. That indicates channeling. That doesn't indicate a down day or an up day. That indicates the fact that there is a shift going on that I need to be aware of. So this major increase in Bitcoin was forecasted to start shifting a couple of days ago. And not shift bearishly, but consolidate, right? Pull back some, withdraw some. And I think it's safe to say that's what we're seeing from a cryptocurrency standpoint. If you're looking at Bitcoin, and you can go check your platform right now, where Bitcoin was a couple of days ago to where it is today is certainly shifted off of the high. However, not bearish. And that's exactly what this artificial intelligence has been indicating for quite some time using these predictive indicators. Another one I get a lot of requests for is Tesla. A lot of people asking about Tesla and what Tesla's expected to do, and is expected to go higher. Is it expected to fall? Well, look, here's the forecast on Tesla. Here's the bullish forecast on Tesla from January 9th. Now, there was a very powerful bearish forecast back here, right? December 6th, you can see that. Tesla fell and fell and fell. A lot of people thought it was going to go fall lower, except the AI said on January 9th, there is a bullish trend expected because we shifted from that red shaded area to green. The neural index was green on that day, and the predictive differences going into that day had positive slopes to their lines. I think you're seeing where, this kind of analysis could, be done and over again. So far we've looked at some futures, we've looked at cryptocurrency, we're looking at a stock now. The analysis, the interpretation of these indicators is the same. And I can load all of the indicators that we've walked through today, the predictive indicators, right here onto this chart. And I want to show this to you really quickly so you can see. That forecast was there. I'll zoom back in. Sorry about that. There we go. That forecast was there on the 9th. We see by looking at the indicators on that day, bullish momentum over the next 1, 2, and 3 days forecasted. Here's 3 days out. We certainly got a higher price. Neural index, MACD, positive slope to the line. RSI coming out of oversold with a positive slope, higher lows on RSI. Same thing with stochastic, coming out of oversold territory, positive slope to that line, right? We can see that we've got bullish volume and increasing percent R. So just like we analyzed on the current markets, we're doing the same analysis on Tesla from the 9th. So you can see, had you had this information, could you have capitalized on the Tesla trend to yesterday's close and picked up, what is that, about close to 10% price change? It's a hypothetical example here where this real forecast provided nearly 10% increase in value in Tesla since the 9th. That's powerful information. Well, let's take a look at Tesla right now. Let's take a look at what the artificial intelligence indicators are saying about Tesla. We're getting a shifting in that blue line. Consolidation expected, right? We're getting a lower high predicted today for Tesla than yesterday's actual high. We're getting a lower low predicted for Tesla today. So at 6:30 last night, seeing the trend shift sideways, because they're going sideways across the screen here, and a lower high and a lower low tells me that, I've got to protect my downside. Picking up 10% is great, but if I give it all back, it's no good. Stop losses come into question. Taking off part of the position or something traders can do. And the question is, why? Why would I do all that if my trend is still moving or expected to keep moving higher? Well, let's talk about this resistance point that's identified here in the VantagePoint software. This red arrow with this dotted line is identifying a resistance point, and this zone is a huge zone that we're not even deep into. Remember the support and resistance rules. We need a second close above this resistance point to call this a resistance breakout. If I don't have a second close, this is the break. Here's close 1. I need a second close above that resistance point to tell me that there's clearly, some bullishness expected to happen here in Tesla. Well, the momentum is shifting. Look, we've got momentum shifting all over the place from bullish to bearish momentum in some of these indicators. So this 10% move is a great, the predictive indicators at 6:30 last night are saying there's a great profit-taking opportunity in this trend. Picking up 5% for you options traders, think about that. Picking up 5% on the underlying asset from an option standpoint is what, 20-25% in a matter of 3 or 4 days. Had you bought a call at this point, set an at-the-money strike, set your expiration out, say 60 days or so, that could really, with the right delta, could have put some quick income in your pockets using this predictive forecast from January 9th and this predicted forecast from last night about today to capture the beginning and the end of a great trend. Now, again, I'm walking through these step by step so that you can see what these predictive indicators can do, but if at any point you wanted to check it out and do it yourself, again, The website is www.vantagepointforecast.com to dig into some of these other markets. Maybe there's one you want to see yourself. I wanted to show you a fantastic forecast out of the artificial intelligence that was identified back here on October 5th in Boeing. Some of you are familiar with Boeing. VantagePoint indicated a forecast at about $131.97 of a bullish trend. I wanted to leave you this one so that you can see that the indications and the information on October 5th were very, very strong. Look on the left-hand side of my chart. I see the crossover first. That's my first indication. I see the neural index, and then the predictive differences going into that day, very, very bullish. And since then, we have not had a cross to the downside or a shift in that blue line the entire time. We're talking about months and months of data, over 3 months of data here. One trend capturing a substantial move utilizing these predictive indicators. And the question that after about 62% change in price, right? 5 options contracts, that's a hypothetical gain here, but just think about that. 5 options contracts on something like Boeing has produced extremely, extremely well. And now from a Boeing standpoint, I can see looking at the chart that the trend is weakening, but still not over. Momentum is shifting, but not enough to bring this position or this trend forecast to say it's bearish. Weakening expected. Let me load these indicators we talked about, right? Weakening expected, momentum shifting, volume shifting, but very clearly you can see here that there is channeling expected to happen, a little bit of pullback. If I zoom in on this, I've got a support level down here at 203. I've got a resistance level up here at 216.50 and change or so. That means I've got some room for price to jump around between support and resistance. And I can use that predicted low and that resistance level to set a stop loss. Maybe a good stop loss point here is around that 202 spot if I'm analyzing a place to protect my downside and lock in substantial gains. Well, I hope this was helpful. We'll be looking here on VantagePoint AI to continue doing our VantagePoint lives. Digging into the current markets and walking through the predictive indicators. Again, if you've got some questions, don't hesitate to reach out. Simply go to www.vantagepointforecast.com and we'll get another live. Subscribe. If you haven't subscribed to this channel yet, subscribe to this channel. We're going to have another live coming up here in a week or two. You want to be on the notification list, so hit notifications so that you can be notified when we schedule a live, because I believe this kind of analysis is helpful. The artificial intelligence and the patented predictive indicators that are able to forecast trends with this kind of accuracy can give you and inspire great confidence, and we're happy to do that for you. So until then, thank you for listening, and thank you for letting me give you the view from my vantage point. Hopefully everybody has a great day. Happy trading.